I, Donald John Trump, do solemnly swear that I will faithfully execute the office of President of the United States and will, to the best of my ability, preserve, protect, and defend the Constitution of the United States. So help me God. Congratulations, Mr. Trump.
What if I told you that 2025 would be a roller coaster year for the stock market and Donald Trump's return to the White House might just be the catalyst? Stick around because today we are diving deep into how Trump's presidency could impact the market using real data, historical analysis and examples to help you prepare and profit. Let's start by understanding the context. Historically, the stock market's performance during Trump's first term from 2017 to 2021 was marked by significant milestones. Tax reforms were brought in 2017. Corporate tax was slashed from 35 to 21%, boosting corporate profits and driving a massive rally in S&P 500 and Dow Jones. Examples of companies like Microsoft and Apple, they saw sharp growth in their earnings, with their stock prices rising 80% during his first term. The other aspect was the trade wars between 2018 to 2020. The US-China trade tensions created volatility. Tech and industrial sectors experienced short-term setbacks, but the overall market recovered due to strong economic fundamentals. The third element of COVID-19 was also an important event during Trump's first term. The pandemic-triggered crash of March 2020 was followed by unprecedented fiscal stimulus, driving V-shaped recovery for US economy. Before we move forward, please do consider subscribing to the channel if the subjects of business, finance, and economy are of interest to you. Fast forward to 2025.
I, Donald John Trump, do solemnly swear.
I, Donald John Trump, do solemnly swear.
Trump's policies are likely to echo similar themes, but with some new twists. Here are some key factors to watch out for. Tax policy. Trump is expected to push for additional tax cuts, possibly targeting middle-class taxpayers and specific industries like manufacturing and energy. The second aspect could be regulatory changes. Deregulation will likely return as a priority. Sectors like oil and gas, coal, and financials are likely to benefit. For example, energy giants like ExxonMobil or Chevron might experience tailwinds, much like they did during his previous term.
The inflation crisis was caused by massive overspending and escalating energy prices, and that is why today I will also declare a national energy emergency. We will drill, baby, drill.
Other aspect is trade policies. Expect more trade-related rhetoric, particularly with China.
I will immediately begin the overhaul of our trade system to protect American workers and families. Instead of taxing our citizens to enrich other countries, we will tariff and tax foreign countries to enrich our citizens.
While tariffs may return, Trump may also renegotiate deals to favor US manufacturing. Sectors like semiconductors could face short-term challenges but benefit from government incentives for domestic production. Fourth element, infrastructure investments. Trump's campaign hints at significant spending on the infrastructure. Companies in construction, engineering, and materials could see increased demand. Here's some data to consider. During Trump's first term, S&P 500 grew by an average of 11.8% annually. Sectors like technology, financial, and energy were the top performers. Will 2025 mirror the same trend? It depends on policy execution and global factors, but it's not all smooth sailing. Here are some risks to watch. First and foremost is geopolitical tension. Trump's hardline stance on China and other global powers could trigger uncertainty. Second is fiscal deficit. Tax cuts and increasing spendings might widen the fiscal deficit, potentially impacting the bond markets and the investor sentiment. The third element, and again a very important one, would be volatility. Policy shifts can create short-term market swings, offering both risks and opportunities for the investors. Now let's shift focus to what it means for Indian investors and businesses. Trump's policies could have both direct and indirect implications for India. Meanwhile, what do you think? Trump's policies would be India-friendly or not? Now let's move forward with how Trump's presidency might unfold for India. Trump has historically praised India as a strategic partner. However, trade negotiations under his presidency often involve tough terms. Expect sectors like IT services and pharmaceuticals, which are key Indian exports to the US, to face stricter scrutiny and renegotiations. The other impact would be on the FDI and FIIs. US policy changes such as corporate tax incentives could attract more investments back to America, potentially reducing FDI and FII inflows into India. This could impact sectors like technology and financial services. The third key element would be oil prices. Trump's pro-energy policies might lead to increased US oil production, stabilizing or even reducing the global oil prices. This would be a boon for India, a major oil importer. Now let us look at the fourth element of rupee versus dollar. A stronger dollar, driven by US policies and economic growth, could weaken the Indian rupee, impacting the import-heavy sectors. However, the exporters like IT and pharma might benefit. The fifth crucial element is stock market linkages. Indian markets often mirror the global trends. Any volatility in the US markets could spill over to India, creating buying opportunities for long-term investors. So what should Indian investors do in 2025? Here are some strategies. First, focus on export-oriented sectors. Companies in IT, pharma or textiles could benefit from a weaker rupee and a strong global demand. Second, stay diversified. Ensure that your portfolio includes mix of Indian and international equities to mitigate your risk. The third is monitor US policies closely. Keep an eye on trade policies and their potential impact on the Indian businesses. Fourth is energy stocks. Look for opportunities in Indian energy companies that could benefit from the stable oil prices. Fifth, use market dips. Volatility in the global markets often create attractive entry points in the Indian equities. Stay ready to invest during corrections. I hope you would have subscribed to the channel by now. If not, then please do consider. Remember, every presidency brings its own set of challenges and opportunities. The key is to stay informed and adapt your strategy accordingly. If you have found this analysis helpful, do give it a thumbs up and share it with fellow investors. Do not forget to like the video and subscribe to the channel for more insights on business, market and economy. Do let me know in the comments as to what is your outlook on the Trump's presidency and we can discuss it further. Be inspired, keep building.